pal.
Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. On the show this week, we've got Gershie Vann.
Gershie Vann, founder and CEO of Magma Capital Funds.
Sharing his story on Magma Capital Funds, a Chicago-based quantitative hedge fund firm. Gershie and I talked through the long iterative climb involved in launching a business, finding alternative skill sets outside of finance when building his team in the midst of the first pandemic lockdown in 2020, what's at the core of his entrepreneurial mindset, quieting the always-on mind of the founder, having an innovative approach to raising capital for new hedge funds, along with a shallow dive into crypto and sovereign currencies. All right here on Money Never Sleeps. So listen, Gershie, awesome to be talking to you in Chicago. I haven't been in Chicago in about 3 years. Last time I was there, I was really fascinated with the city. It's a fantastic place. So you're the second guest we've had on from Chicago. We had Mike Kavanagh on a few months ago, and we had a great chat, and he led us into the story of the Cheddar Curtain, because he's originally from Wisconsin. But I know you've got a bit of a different story to that, Gershie. So how about we just jump right into it? You just share your backstory with us and how you got to this point.
Sure. So I grew up in Southern California, in Los Angeles area, a city called Calabasas. I went out to New York after high school, studied Jewish law for 3 years, and then got my degree in finance. And then after that, my wife was about 6 months pregnant. She's from Chicago.
Wow.
She said, not having a kid away from my parents, happy wife, happy life. So I followed her out to Chicago. And, I spent around 2.5 years doing systems design and business intelligence. But my passion, my heart had remained around macroeconomics and the world of finance. And so I wanted to design some product that could kind of synthesize this business intelligence, systems design, and just kind of build something beautiful. I'm an entrepreneur at heart. I've done a lot of, entrepreneurial stuff since I was a kid. And I wanted an opportunity to take that a little bit bigger. And so I started Magma in March of 2020, and we've been just building ever since.
Very good. And I've got to think that going through a finance degree in the last 7 to 8 years is going to be a lot different than the one I went through in the 90s. There's so much more focus on technology. Is that a safe assumption?
Yeah, I think the whole paradigm of how financial markets work has changed. I think the dominant theme is less tech than it is interest rate environment. I think we're in a fairly unprecedented monetary policy environment.
That's a good point, because I do remember that so many of those formulas that we started off with were with a risk-free rate of 5%. And that's like a fairy tale these days, right? And that was back in the 90s. And then when I was working for BNP Paribas in the 2000s, what I saw in terms of the impact of the interest rate going down and down and down, and all of that free float income that the bank used to earn just was gone. And so you had to get a heck of a lot smarter on the tech side. Having started the business at the beginning of the pandemic, that's something that feels like it's pretty hard to do in March of 2020. Was that a bit daunting, or was it just like, hey, let's go for it?
It was definitely daunting. I think, starting a business in general is daunting. Luckily, I had raised the capital to run the business, kind of for my first year of operation in February of 2020. And my business partner was, he came through on his end through the whole COVID situation. But, there's always positives and negatives of every environment. When you start out in the middle of COVID and you start out with systems that are designed to be remote, you start out with a more talented unemployed labor pool than you typically start out with. You kind of get more of a chance to focus on building out the business rather than, in March, April, May, et cetera, of 2020, you couldn't meet with investors. And I firmly believe that the allocation of capital will always be, a very personal decision. It's going to be, it's done through face-to-face meetings. I don't really think that's going to change. And so if you can't meet with clients and raise capital, you have to really focus on the product that you're building. And that provided somewhat of an opportunity. I think there's a lot of really, really brilliant companies that were born in the midst of a crisis, and in a way it kind of strengthens you. That said, I don't know that I would have volunteered for it.
Yeah, no, it's just timing. And if it's like you're all ready to go, you kind of just have to go, right?
Yeah, I mean, when you jump, you have to be in, and whatever situation life throws you, you have to just paddle through it. And, hell or high water, you're going to get to where you want to go.
Absolutely. My wife and I just started sea swimming here in Dublin in the last month or
Oh,
so.
really? Okay.
And it's cold. But you just got to go in, you got to stay in, or else you'll get right out and you won't have any fun. But your body does adjust to it. So can see some analogies and parallels there. Can you talk about maybe a few of the lessons that you learned in the first few years of your career before you launched Magma Capital Funds that you think might have helped you to build the investment process for basically the quant hedge fund that is the Magma Capital Fund family? Yeah,
I think I learned the value of having a supportive manager and the importance of process in designing anything, the importance of building systems within companies that are designed to divert fires from people's desks. I think a lot of startups run where everything is always on fire. And it's very hard to stay strategic and focus on the end goal that you want to get to if you're constantly just putting out problems and dealing with like immediate problems that are not of strategic import. I think that was something that I definitely learned from earlier. I also learned that I am not the best at operations and that I should hire someone who was really good at that.
Okay.
And I'm good at ideation and strategy and all of that, but the day-to-day, the implementation, the very small details don't fascinate me to, quite the same extent. And that's fine. The nice thing about being an entrepreneur and building out a company is you can cater to the skill sets of the different, people within the company. I would say those are, a few things that have been really important in building the company.
Interesting. And thinking about how you did build that investment process, right? Recently, we had an Irish fintech on the show, and they're called Keto Finance. Shane Monks O'Byrne came on. Very similar to you, just having a mindset around finance, having a mindset for quant investing. What they basically did was he believed that the book, What Works on Wall Street by James O'Shaughnessy was the Bible, and started with 6 strategies that came out of that book and reverse engineered them back to 1926 or something to that effect.
Okay.
And then play them all forward and said, these are the strategies that we're going to use, these 6 core strategies. And then they come up with another, I think, 10 or 14 on top of that. How did you guys go about building your investment process for these first 3 funds that I'm seeing that you guys have brought live?
So I was reading a book called Principles by Ray Dalio, and he talked about the all-weather fund that he had built, which essentially, he was just running an optimization of different assets across time. And I think the innovation that he was introducing to markets at that point was typically people had thought of diversification in the context of intra-asset diversification. So, diversifying amongst, let's say, large cap stocks. And it hadn't yet become common to have a fund that was diversified across many asset classes and across time. And he built, a fund like that. And I remember reading it and thinking, like, this is complicated, but it's not that complicated. It's fairly intuitive. And of course, like, ideas are always more obvious in hindsight than they are when you're first coming up with it. But I just remember thinking, like, there must be a way to build a fund that isn't just focused on growth periods. It's not going to be a long only fund. And it isn't just focused on black swan events, kind of like what Nassim Taleb builds. Yeah. There must be a way to build a fund that could kind of traverse all of the market environments. And that, kind of evolved into, okay, well, how do we build a portfolio that isn't static, similar to the way that, Ray Dalio's portfolio was static, where, something that works in a specific market environment is not necessarily going to work in a different market environment. Assets are not static. They react differently in different market stages, market environments. And so that, kind of got into, okay, well, what's the pulse of the market? The pulse of the market is volatility. If the pulse of the market is volatility, can we perhaps break volatility down into quartiles, into segments, and then optimize our allocation to equities and treasuries for each of those segments? And now, you have your risk on allocations and your risk off allocations. And, once that's built, well, now you can use machine learning. You can build models to select the optimal allocation for that specific day. So in a nutshell, that's, and it wasn't the case that like this happened in one day. I spent around a year researching it. It was a process. Like, I think like anybody who starts a company, there's never, often like people will ask you like, oh, how did you get here? And it's almost impossible to explain how you got there because it's just this endless like iterative cycle. But yeah, that was kind of how the idea developed.
Yeah. Everyone kind of sees where it is now and thinks, wow, that's such a quick success. But it's like, no, this one's been brewing for a while.
It's so funny because like if you saw someone climbing a ladder and they were standing on the top stair, you wouldn't say like, how did you get to that top stair? Obviously everything in life is like that. Nobody just, nobody just appears and bam, like you're at the top step. It's funny to me that like a lot of people perceive it like that. They don't see like all of the steps that go into things.
Yeah. Yeah. All the hard work, all the heavy lifting, all the climbing.
Mm-hmm.
It's a big
Mm-hmm.
deal. I know. Can you tell us about how you went about building the team, especially the qualities that you look for in people that are effectively joining a brand new investment management business?
Yeah, so a lot of the skill sets that go into building, a hedge fund, especially a hedge fund where you're going to focus on both the quantitative side in terms of the product development, but then also you want to put together marketing pieces that speak to the emotive component of the product. You don't necessarily need to solely focus on people that have been within the world of finance. And often, in fact, people that have been within the world of finance for 20 or so years are kind of locked into a set mode of thinking, which isn't necessarily great for your company. And so I've looked for people that are genuinely curious. And so they appreciate this, the iterative cycle where, you are where you are now, but that doesn't mean that that is the ultimate truth. You're always trying to improve and get to the next step. And then also people who are humble, people who are willing to collaborate, not just willing, people that enjoy collaboration, that enjoy this kind of collective team effort. A lot of the initial hires were from Industrious, which is a co-working company that did a really phenomenal job at taking office space, which is a fairly commoditized product, and turning it into a very elevated product. And that was exactly what I wanted to do with Magma. Obviously, you want to build a product that's different, but also a product that genuinely felt different. The whole investor manager relationship felt different. And so I wanted to bring in people within the startup space who had built something like that.
I gotcha. That makes sense. And then thinking about kind of looking inward a bit, what do you think are some of your own personality traits that you found to be helpful in getting this business off the ground over the last year plus?
I think every entrepreneur has to be a relentless optimist, almost to the extent that it's irrational. You have to really, really believe in your ability to surmount any obstacle. And I don't mean that in the sense that, you believe yourself to be the Messiah. Everybody should be cognizant of the limitation of their skill set, but you should also be cognizant of your skill set, and I think I'm fairly innovative. And a lot of this is a product of having the right team behind me, but of never having some problem become the end of the company. And so, we've relentlessly just improved, I think, at a fairly rapid clip. Everybody within your company looks to you for reassurance that, everything's going to be okay. And so when you go through, let's say we had a 3-month period during the first quarter of this year where we were taking losses. And this is the S&P 500 this year has just been the greatest hedge fund in the history of man. It just keeps going up, never experienced a 5% drop. And here we are taking losses because of a treasury position. And of course, early 2021, treasuries took the worst hit since 1980, long-dated treasuries. And, you have to project that confidence that, guys, we're going to get through this. Here, let's assess what the problem is. Let's build a systematic framework to ensure that this problem never happens again. And let's push forward, because you're not just selling your performance over the 4 months or whatever that you've been in business. You're selling your thesis. You're selling your ability to continue to innovate. And we pushed through it, and it was great. So, kind of that type of mindset, I think, is really helpful.
Is there anything that's inside of you now that might not have been so helpful, just with some of your own internal characteristics and things that you've said, well, you know what, I'm going to take that lesson learned and I'm going to work on that?
I think that riding on this idea of, of relentlessly innovating, you could get stuck in a frame of mind where you're constantly reviewing a problem. And it's because I think this is probably true of many entrepreneurs. It becomes your life. I have a family, I have a wife and 2 kids, but it's very challenging to build that line between the two. It becomes near impossible because you have this responsibility. There's people that work for you that, that rely on, the paycheck that you're going to send out at a certain cadence. There's investors that have trusted in you and in your ability to build this company. And sometimes that constant thinking about problems prevents you from actually solving the problem because your mind doesn't have enough room or air to just free think. So I think that workaholic type approach has in a way made it more difficult to solve problems. But there's been a lot of, you get better at kind of figuring out when you've hit your limit and when you should adopt other things within your day-to-day life to allow you to work through challenges more quickly.
Yeah, I totally hear you on that, is that the, overanalysis can lead to paralysis, right?
Yeah.
And that when you're thinking through these problems all the time so much, that sometimes it's that, well, that solution is just so elusive that, well, I've really got to think through this all the time. Other times it's that you're judging yourself, right? Why did we not get this right? And that judging leads to thinking and thinking and thinking and overthinking. And I'm taking this coaching course right now that deals with that specifically and how to get that headspace. In the last 2 weeks since I've been doing it, started to stop those 3 a.m., your brain goes on, it starts racing, and it takes a while to get back to sleep. There's some helpful ways to start unlocking some of that headspace, as we say, right?
Yeah, I think like the root of creativity is finding the commonality between different paradigms or models of thinking. This is true both of I think product creation. You find some overlap between two different spheres, two different fields, and you apply some feature within one field to another field. And when you slot those two together, you have something that seems genuinely novel and people perceive it as innovation, but it's really just a transference of something that exists in one place to another place. And I think when you constantly think about one paradigm, one sphere, you don't have that ability to free think and to pull from other areas to innovate your way out of that problem.
Yeah, I hear you. When you've got such a big ongoing problem to solve, which is how to deliver returns in a market based purely on quantitative strategies, that's such a big problem to solve over and over and over again. There's so many different inputs that you could draw into that and there's so much information out there that could help you do that. It's endless. I feel for you, man. I feel for you. It's not an easy business to be in.
It's happened 2 or 3 times, but it's healthy. It's good. It shows you where your limitations are. And it's funny. I used to exercise, just to exercise, stay healthy. And now I exercise purely to allow myself to deal with the stress of running a company. So your whole approach changes, but it's a joy. I'm happy that I started it. I would do it again.
What Shane Monk O'Byrne said was that, being the head of a quantitative investment platform, it means that he gets to outsource some of his decision making, and a CEO needs to make a lot of decisions. If it's a quant strategy, the AI basically is making the decisions for you, right? So that just presents him with some calm. And I know he does some mindfulness and meditation, so it's all good stuff. Listen, tell me, you mentioned the investors and having a look at some of the detail out there online on Magma, and seeing, I think in particular with the Obsidian Fund, that you were targeting current and former athletes to help transform the money that they made in sports into generational wealth. Has that been your core investment fundraising strategy and channel, or was that just one of them that you tapped into for getting this business off the ground?
No, that's just one of them. The core product has been the product that we launched first, the Magma product. And it's more of a conventional hedge fund in that it's targeting the audience that a typical hedge fund targets. You start out with your high net worth investors, and then you graduate into the institutional investors base, be that family offices, pensions, endowments, that type of thing. Obsidian was more of, I felt that the professional athlete community, and some of this was just a little bit of a hunch that I had, was underserved by presently available financial products. There was this tendency to allocate to products that were enormously concentrated, had far too much volatility, like Bitcoin or crypto. And then there was also a tendency to go the exact opposite way and keep all of your capital in cash. And I think to a lot of these athletes, they serve as role models for the community they came from. They serve as the range of expectation that these kids who look up to them can have. They're this is how high I can soar. And if these professional athletes, after they, finish their careers, let's say someone becomes an NFL player at 22, they play in the league for 4 or 5 years. I think your average career is 3.5 years. So they finish at, let's say, 26, 27. They've made $3-4 million. If we can enable them to have a successful career after, we can grow their capital such that they can go into philanthropy, they can go into business, etc. They don't kind of crash and burn. I felt that could really change a lot of those communities. That if some professional athlete could go on and get an MBA, then I can get an MBA. If they could go into investment banking, private equity, etc., well, then that's cool. I would like to do that. So for me, the professional athlete fund was, a lot of it was like a passion play, if you will. This was something that I felt was a way of kind of giving back.
Very good. I get it. And I think at the beginning stages of your business, having relationships with current and former athletes is a good thing with all of the innovative ideas and innovative implementations of technology that are happening right now at the intersection of sports and the metaverse. There's loads and loads of opportunities there to build something. So that's pretty cool. Are you free to share how big the fund's business has gotten over the last year and a half? Is that a number that you guys talk publicly about?
Yeah, so we're still sub 10 million. We've onboarded around 35 investors. And, we're really still going through this transition where initially you take your $25,000 checks, then you take your 50,000, your 250,000, your $500,000, your $1 million. And we're still kind of working through that. There's a few milestones that you hit. There's a little bit of like a chicken and the egg challenge where everybody wants to associate and allocate to winners. And so until you've proven yourself that you're a winner, which typically happens by people allocating to you, then people are hesitant to allocate to you. And so, you spend most of your time trying to grapple with that challenge of how do we scale our assets under management such that the product is perceived with sufficient credibility that people will allocate further. So we're definitely still going through that scaling stage.
Yeah, no, getting close to 10 million in the time that you've been running the fund is quite impressive. So well done.
Thank you. Yeah.
I was speaking with a hedge fund manager of similar scale and size a few months ago out in Silicon Valley. And what I was saying to him was that, listen, getting to 10 first, excellent, right? And then it's okay. You can start to see a path to get from 10 to 12 with just some bigger ticket checks being written by either current or new investors, and then 12 to 15, and maybe then 15 to 20, right? And then you get 20 to 25. And then once you're at 25, 32, 39, 45, 50, right? You get up to 50. And as long as your performance is good through that period, and that's a big if, right? Then you're on a path. I had been in the investment funds industry for a long time, as I mentioned before we started recording this tonight, Gershie. And I'd seen a lot of fund managers with fantastic ideas start off with 10, 20 million, and that, within a year they were up to 110 and then just went from there. So, I saw others go up to 130 and then crash back down to 8 because of a bad bet at the wrong time. Can you think about over the last year and a half, obviously having built a team, folks that you lean on and that lean on you, obviously, but are there others that are outside of the business that you lean on?
Yeah, I've tried to, I think everybody has something to teach you. And my philosophy has not been to find that one person, but more to find characteristics that different people have that I can, kind of pull in. Definitely the two partners, I have two equity partners that have come in, the first with 1.5 million and the second with 3 million. They've definitely been, a support system. They're both successful entrepreneurs, and they're both people that I can, kind of fall back on when going through a challenging moment. Yeah, I would say those are the two main ones. I'm very close with my father as well, so I'll lean back on him.
Yeah, that's good. Yeah, can be quite helpful. I do the same thing. It's wisdom can be quite helpful, right?
Yeah, it's definitely true. It's funny how perspective in life can kind of help you a lot.
Yeah, especially when there's so much going on in the here and now. It's obviously helpful to step back. You know that, but it's good to step back with someone who's been stepping back quite a few years for a longer time than you have. Absolutely. Can you maybe perhaps thinking beyond those that are close to you? Obviously, it sounds like you've got a great support group there, but can you point to an entrepreneur that you look up to who may have inspired you to do this?
Not really.
No.
It's kind of funny. I have a lot of confidence in my ability to navigate situations, for better or for worse. And I think that you're cognizant of who you are and you pull, the characteristics in different people that you feel are relevant to you. So, you see someone and you're like, oh, that person is very candid. And, that's something that I could improve on. Or this person has more of an abundance mindset. That's something that I can adopt. This person is very charitable, open with their time. That's something I can adopt. And you can do that and, start finding the different areas that start to complete who you are. Then you start to get a really good sense of what you can do and what the limitations are of your skill set. And when I was working at my previous role, I really enjoyed it. I was kind of like an internal consultant within a company. I reported directly to the COO, and there were, certain problems that they had, and they would say, here, Gershie, figure out a more optimal way to run this staffing challenge. Figure out a more optimal way to pull data for our business development approach. And I loved that job, but I just felt like I could build something, on my own or go out there and do it. It's kind of like a double-sided sword it's got its ups and downs to look to someone else because you can forget about yourself and, who you are. Like, yeah, Mark Cuban, he's done some really cool stuff, and Bill Gates has done some really incredible stuff. But like, what about you and how relevant is that for you? So I don't think, it's definitely the case that I grew up around entrepreneurs and certainly much more comfortable with risk because of my parents' approach to risk, which is more like focus on asymmetric upside opportunities. And so in most instances, I think a lot of cases when people are afraid to make the jump, there's actually very little downside to making the jump and there's massive upside to making it. And once you get past that like mental hurdle, then it's just easy. And I don't mean that to like undermine the difficulty of starting a company or of hearing people say no to you. But once you like kind of shift that mindset, it's a lot less challenging, let's say.
Yeah, I mean, it's your risk appetite, right? And that what is normal for you for the amount of risk that you wear every day, personal risk, professional risk, relationship risk, every kind of risk, right? That's normal. That's your status quo. When others look at it and they see, okay, that's quite a lot of risk and it's a different kettle of fish for them. So I don't look at any single one entrepreneur, but you gain insights from so many of them. And as long as you can build that together into your own modus operandi, then you're doing well, right? And yeah, it'll be hard for me as well to point to one, but I know that a lot of folks do, right? I used to work with this guy who absolutely loves Jack Dorsey from Square, right? And he's his hero. And he, grew a beard like Jack Dorsey had.
Yeah, I just think like there's so many, everyone is a genius in their own way. Like Steve Jobs was a creative genius and he was good in his own way at like mobilizing talent, but he seems to have been like fairly mercurial. That's not my approach.
Yeah.
So, I'm going to take, everybody has their little bit that they contribute that you can, kind of take in. I think idolization in general is not the healthiest approach. I'm not, and I don't mean to imply that was embedded in the question, but I think like in our culture, it's common to like look to one person and try to become that person. And I think that's a mistake. I think we should be looking to people to isolate the character traits that are relevant for us and then kind of build ourselves up. I think also there's this tendency to like look at the past and say like, well, they did it, but there's no way that we could do it. And I just don't think that's true. I think that our focus and determination and hope is the limit of what the future will be. That's it. Like if you want the future to be something, so make it that.
Exactly. You think that idolism is built into American culture? It's been 20 years since I've lived in the United States, by the way.
I do. Yeah. I think that, just think of any stardom is definitely pervasive. Like everybody has someone that they look to. Like we're definitely living in a winner take all type culture, and not just like in an economic sense, but there are certain athletes that have ascended the pinnacle of athleticism. And it's not like, let's say they're 30% better. And so they have 30% more of the attention. They have 1000% more of the attention or more, like you could find someone who has 90% of the skill of LeBron James. They are not receiving 10% less attention than LeBron James. It's far different. I think human nature, at least in the modern world, in modern America, is to gravitate towards the absolute best and to idolize that person. But you're not that person. So like, what's the point? It's like when you walk by some model that, is wearing some outfit and you're like, oh, why don't I buy that outfit? Because that model looks great in it. That's a foolish mindset. The model looks great in it because they're 6'2" and weigh whatever.
Yeah.
But you need to figure out what's going to look good on you.
Yeah, exactly. No, and I've noticed this recently in the US is that fame is a currency, right? And that compared to Ireland, where I live, it's not. Bono walks down the street and he'll get tomatoes thrown at him. See, I even say tomatoes the Irish way now. That's funny. It's like, dude, get out of here, right? Unless it's me, where I do actually go up and say hello and introduce myself, right? Anyway, it's a different mindset. And I think it's that, the US has been the land of opportunity for the last, 250 plus years. So it's just a different mindset. What's going to come next for Magma Capital? Where do you guys go from here?
I think, we definitely over the next few months need to focus on scaling. My vision has been of, having multiple funds that could grow with strategies that are uncorrelated with one another, with markets that are uncorrelated with one another. But I think the next big fund is a crypto fund. I'm not sure I'm a huge believer in like the value of crypto simply because there's a limited quantity. There's a limited quantity of many things. Doesn't mean that they should have value. I think ultimately the floor of the value of crypto is going to depend on institutional managers deciding to allocate to crypto and not budging that allocation. That's what's going to put a valuation floor underneath it. And I'm attending this conference later this month. And one thing that I found just absolutely fascinating, almost every family office attending was, it states the opportunities that they're interested in reviewing, was interested in either reviewing real estate or Bitcoin, which is such a fascinating, like basically real estate is considered the most safe asset. They're looking for commercial real estate, right, steady cash flow, and Bitcoin. So to me, that signals, okay, the institutional investment community has decided that they need exposure to crypto broadly. But crypto as an asset class is not currently designed as an asset that behaves the way that assets typically do. Mm-hmm. You can lose 50% of your money in crypto over a very short period of time. I don't think that's an acceptable risk level. And so we'd like to create, a fund that has a max drawdown of 20%, that trades on a far greater frequency than a typical fund that's trading in, large cap stocks, that type of thing. So to kind of bring crypto with a risk profile that's more equivalent to other asset classes to institutional investors so that they could, get exposure to that asset class.
Interesting. Yeah, I'm deep into the crypto space, and that 21 million supply story, that's just for Bitcoin, right? Mm-hmm. That's it. And I think part of the wave that Bitcoin is on right now, that has been driven by mass affluent and high net worth individual customers to say, hey, listen, I want to get into the space. Can you make it easier for me to do that? I heard mm-hmm. it's pretty hard, right? Mm-hmm. And it can actually be pretty easy if you're working with the right folks. But, a lot of folks have said, oh my God, there's only 21 million ever going to be produced. Then mm-hmm. I better go in and get some, right? And I think I kind of see where you're coming from, right? But I've always thought that something is worth what someone else is willing to pay for it.
I think crypto can't become the dominant currency in the United States. If it does, the Federal Reserve will lose control of monetary policy, and it will be terrible for the U.S. and the global financial community. And I know some people could differ about that. You could have a limited supply of capital, and maybe that would be better. It'd be more similar to gold. I would fundamentally disagree with that. I think that if we went through 2020 and the government was limited to crypto, we would have absurd unemployment right now. We'd have massive civil unrest. So, the government has to have the ability to increase the money supply within an economy. There's limited potential for crypto in the sphere of it functioning as a currency. That said, I think crypto's upside is only vis-a-vis its status as an asset class that's uncorrelated with other asset classes. So long as crypto is an asset class that's uncorrelated and it hits a certain tipping point, which I think it's already hit, it will continue to be something that's valuable. There's no way around that.
Yeah, there's a very interesting adoption curve happening around the world, but I agree. Bitcoin is not ready to be the United States sovereign currency. Absolutely not. If you think about where the personal computer was in 1979, and then 15 years later, you had Netscape. Mm-hmm. And then another, 12 years later, you had the iPhone. And that progression path of effectively 25 years to the point where people were walking around creating and generating data with these devices mm-hmm. in their hands all the time, and the exponential growth mm-hmm. of digital and of digital money, basically. Mm-hmm. And the first incantation, which is just fintech, that mm-hmm. now Bitcoin 2008, 2009, we're still early days. And I mm-hmm. love the fact that El Salvador are going in this direction. And there's risks obviously with that. But mm-hmm. I think that what will come out of this and this interesting adoption curve for Bitcoin in the global markets will mm-hmm. be the sovereigns, the federal governments, the central bank saying, and it's a big topic right now with central bank digital currency, saying what are some of the benefits of being able to operate a digital currency, but operate that as a sovereign currency rather than a decentralized mm-hmm. one. And I think that will be interesting. It'd be great to be able to see, domestic aid transferred mm-hmm. into people's mobile wallets rather mm-hmm. than having to wait 3 or 4, 10 days for a check to clear. No,
100%. I think you're completely right in terms of like, are we moving towards a cashless world? Yeah. I mean, there's no reason why you should have to use like an actual physical paper. I would imagine that most people are not actually using dollars anymore. I don't think I haven't carried in quite a while. But I think that this one feature that it seems to me a lot of people focus on, which is that there's a finite quantity. I think that inhibits the rise of and this decentralized component. I think that places like places a cap on how far this can grow. I mean, I don't think it's the type of thing where like in 40 years, sovereign countries and central banks are going to decide, it's all right. We won't control our money supply. We'll just let it.
No, you can't.
We'll just let it. So, but I still think that there's value there.
Yeah, there is. And, there's thousands and thousands of cryptocurrencies right now, but probably less than 100 that actually matter. And the majority of them, were never designed to be currencies. They're speculative assets that have some utility, but that can also be used as a medium of exchange, right? And I think there's a little bit of a different story for each one. And we can definitely talk further about how to break those down. Been going down a few rabbit holes recently on this, but more to come. Listen, we're at the point of the podcast, Gershie, where we do like to ask our last final question, which is, what is one thing that people wouldn't expect to know about you?
I'm actually curious, when you have guests, do you find that people typically have pre-rehearsed answers, or
it's half and half? Someone will do, let me think about that, and then immediately they say it. So they're faking the let me think about that.
Yeah, exactly.
Others will pause and will, not be able to come up with anything, but most will have something. Some people have said, well, listen, what others wouldn't expect to know about me is that I'm a very secretive person. And that was basically like telling me to, PFO,
I don't know. I mean, something that a few people have found surprising is I'm one of 7 kids.
That's interesting.
I'm the oldest of 7. My youngest sister is, I'm sure I'm going to get it wrong, close to 19 years younger than me. And so in a way, she's a little bit like a niece to me. And there's like a certain responsibility that comes with that kind of lends itself well to entrepreneurship and to being, a manager and owner of a company. But I think in like modern America, it's more and more rare for someone to come from larger families.
That's interesting. We got a similar story there as well. My dad is 18 years older than his sister.
Oh, yes, that's exactly the same. Yeah, it was funny. I went to lunch with my sister a couple weeks ago. And she says, you left the house like right after I was born. I don't think I even know you.
Well, you got plenty more time to make all that happen, Gershie. Plenty more time.
She's very candid. Yeah.
Very good. Awesome. Well, it's been incredible having you on the show. Thank you so much for coming on. I wish you nothing but the best of success with Magma Capital Fund. Sounds like you guys are really on to something.
Thank you, Pete. I appreciate it.
My pleasure. Thank you. That does it for this week, folks. A big thanks to Gershie Vann for opening up his mind to help us figure out why he does what he does. Links to get in touch with Gershie and learn more about Magma Capital are on our website at moneyneversleeps.ie. So check us out online and subscribe to our Money Never Sleeps newsletter as well. If you like what you heard, we would sincerely appreciate a 5-star review on Apple Podcasts or whatever platform you're listening on, as it helps others to find the show. And remember, Money Never Sleeps is spelled as all one word. Also, thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm an early-stage startup advisor and investor focused on fintech and digital assets. If you'd like to talk to me about your business, drop me a line on info@moneyneversleeps.ie. Finally, till next time, thanks for listening. See ya!
Money never sleeps, pal.